Hello, everyone, and welcome to our panel on operational resilience, a strategic imperative for uncertain times. We're living in an era of unprecedented geopolitical tension, economic downturn, financial system disruptions, and still feeling the side effects of a global pandemic. These challenges have highlighted the need for organizations to build resiliency, to be well prepared for unexpected shocks. Today, we have assembled a panel of experts that will share their insights and experiences on how organizations can achieve operational resilience in face of these challenges. We hope that our discussion will bring to you new ideas, insights, strategies for building resiliency and preparing your organizations for uncertain times ahead. Before we start our discussion, let's do some introductions. I'm Roxana Baranowski, Deputy Chief Risk Officer at Payments Canada, and I'll be your moderator. We're fortunate to have today an amazing panel with wide range of leadership experience. Sonia, I'll pass it to you for your introduction.
Terrific. Thank you, Roxana. I'm Sonia Baxendale, the CEO of the Global Risk Institute. Prior to that, I held various roles in banking in Canada, and very pleased to be here.
Mario, please introduce yourself as well.
Yeah, thanks, Roxana. Hello, everyone. I'm Mario Falvo, the Chief Financial and Risk Officer for Interac Corp. My portfolio at Interac includes our finance and risk management functions, and I'm also responsible for managing the ongoing requirements of our prominent payment system designation with the Bank of Canada. For those of you who don't know who we are, Interac operates the Interac e-transfer service, along with other payment systems such as debit and automated banking machine infrastructures. We're also offering verification solutions within public and private sectors through our subsidiary 2Keys and the acquisition of the rights to Secure Key digital ID services for Canada. Very happy to be here today and to have this opportunity to discuss the very important topic of operational resilience with my respected peers.
Welcome, Mario. And Peter, last but not least.
Hi, Roxana. Thanks for having me on. My name is Peter Dodic. I'm the Chief Risk Officer at Payments Canada. I've been with the firm for 5 years, and I'm lucky enough to lead the compliance, audit, risk, legal, and security functions. Before my time here at Payments Canada, I worked at the Bank of Montreal for 15 years, experience in corporate development, in finance, and in risk. In a former life, I was an engineer in the resource sector. But enough about me. Back to Payments Canada, the important part. Regarding what we do, we own and operate Canada's payment clearing and settlement infrastructure. And of course, that means associated systems, bylaws, rules, and standards.
Perfect. So we'll start with our first question. OSFI defines operational resiliency as the ability of an organization to deliver its operations, including critical operations, through adverse disruptions. The fundamental principle in resiliency is bend but don't break. What are the key principles of resiliency, and why is it critical for organization to develop this capability in today's uncertain times? And Sonia, I'll start with you.
Thank you, Roxana. Really important question. And so first of all, what I would say is that building resilience has never been more important. And when I say that, what I mean is that there are so many forces at play today that can impact your organization. Starting with simple things like controls or product failures, natural disasters, cyber attacks, reputational blunders, or issues like the recent SVP issues, which caused ripple effects across the economy, or even just the general volatility of macroeconomic environment conditions and the impact and the interdependencies of those on organizational risks. So really imperative that operational resilience become a priority in every organization, frankly. Many of the organizational challenges that you might face are beyond your control, but they impact you nevertheless, and you have to prepare for them. So when I think about operational resiliency and what you do to prepare yourself for it, and why you need to develop this capability in these volatile and uncertain times, I think about 4 priorities. So the first priority is effectively to position yourself as best you can to minimize the risk of events occurring. This is easier for those risks that you control directly, for example, operational issues or reputational blunders. So that's really the first line of defense, I would say, is really make sure that you are dealing with the operational and control issues in your organization to the best of your ability to mitigate and minimize risks impacting you. The second is to position yourself to absorb stresses when they do occur, because they will occur. And they may come from within or they may come from outside your organization. And in terms of positioning yourself to absorb stresses, I think you need to think about things like your capital and liquidity, your operational effectiveness, stress testing, really being sure that you understand how stresses will impact your organization and mitigating for them as best you can. The third component, I say, is to position yourself to recover or respond. So in this case, it's really important to focus on critical functionality. And you need to think this through before a crisis occurs. What are the critical functions? Prioritize how your customers will withstand your outage or your issue. Have a plan to restore functionality. Those are the kinds of things that you really need to have well laid out, well practiced, and well understood across your organization. And then finally, I'd say part 4 is to grow and learn from the experience. Although most incidents don't repeat themselves, or most stresses don't repeat themselves quite the same way, there's an awful lot to learn and actions to be taken to position yourself for the next stress, even though it is likely to be something a little bit different than what you've just been through. There are lessons to learn from it to position yourself. So it really is all about trying to avoid as many of the stresses or the issues that might occur, positioning yourself to recover from them and to absorb them, and then learning and growing from them, and really being ready for the next one. With that, I'll maybe turn it over to my colleagues.
Mario, what are your thoughts?
Yeah, thanks. Great comments, Sonia. I really like those 4 points. They definitely resonate well. So I think I'd start off by saying when we hear the word operational resilience, it's likely that the first thing that comes to mind is business continuity. Business continuity is very important for any organization, whether it's a pandemic, a cyber event, or a technology outage. It's really critical for plans to be established to deal with these threats to our operations. And that's one of the key things that Sonia just mentioned. And while those plans are necessary, organizations can and should also take a proactive view to operational resilience. What I mean by that is identifying the threats that can impact the operations of your business, and then developing plans and strategic investments to prevent or minimize their occurrence or impact. So I'll give you a few examples. For technology resiliency, that means maintaining the currency, the scalability, the robustness of your hardware and your software systems that are used within your business operations. For information security, you need to have a framework, policies and procedures for establishing and maintaining a strong security posture over those systems and your data. For incident management, it means not only responding to operational incidents, but like Sonia said, using root cause analysis to identify control gaps so you can try to prevent future ones. Third-party risk management is tremendously important to manage. Small or large businesses will rely on one or many other businesses for a variety of critical operational elements. And so if you don't have a program to assess new and existing third-party relationships and the associated risks of those, your business can be very vulnerable. And finally, operational risk management in general is critical. It's the foundational principle of managing risks in people and process, in technology, and it is a cornerstone of enhancing your operational resilience. The key is really to proactively plan and invest in these areas so that your organization is less vulnerable to disruptions to operations. So think of the goal as being not having to use your business continuity plans. You still need them, but if you can effectively manage operational risk, you can avoid some material events that will require their use. So I'll turn it over to Peter for his perspective.
Thanks, Mario. Some really good points from both of you there, and I'm in violent agreement. This is a topic that we talk about quite a bit in my team, and I'll try and take it quickly, two perspectives: principles and importance. So when I think about the principles, my sense is that to ensure our systems operate normally in times of crisis, I think we need to put in the work. So similar to what Mario just said, when I say put in the work, I mean to be proactive rather than reactive, right? And at an enterprise level, this means doing the right planning, the right testing, making the right technology investments on an ongoing basis, right? Planning and testing is what will keep our resilience culture strong across the firm. And I think it keeps us ready in case an event happens. And as Sonia said a few minutes ago, events do and will happen. Things like governance, monitoring, reporting, those things help us keep our finger on the pulse of both our people and our operations. So also very important. Maybe a last thought in terms of principles, and it's a bit around culture and having, a culture of transparency, a culture of trust. I think that's important to facilitate information sharing, supporting second opinions. And then you could argue to even foster psychological safety, which I think helps us get to a better answer quicker. In terms of importance, if I think about my firm, this is an easy one, and this is one that's ingrained across our organization. Resiliency is critical to us at Payments Canada because we could provide such critical infrastructure to our economy. So we clear 500 billion, that's with a B, $500 billion every business day. So resiliency is not an option for me, it's a must. And it's a must for FMIs like us.
Yeah, those were pretty good points. And I kind of like that proactive nature. Also, the framework that you gave, Sonia: minimize, absorb, respond, and learn. I think those are key principles to take away from for operational resiliency. Now I'll move, I think, Pete, you talked about governance, monitoring, reporting, regulatory in landscape is very important for all of us. And we've heard from our regulators like OSFI, Bank of Canada, the Fed and OCC in the US, that operational resiliency is top priority. What do you think is the role that regulatory bodies can play in supporting the operational resiliency journey? And how can organizations navigate the complex regulatory landscape, requirements, expectations? And Mario, I'll turn it to you.
Yeah, thanks, Roxana. So I think for any organization, it doesn't matter who your regulator is. Very likely that operational resilience is going to be, if not the top of their list, very near the top of the list. So regulators have a broad and a deep view of what operational resilience looks like for many different organizations, as well as a view both domestically and internationally, because they certainly interact with other regulators, both in their existing jurisdiction, but also in others as well, to understand what's going on elsewhere in the world. So this is a good source of information for organizations as they set their programs for resilience, where they plan to invest and focus their resources. So I think one role that regulators can play is ensuring that there is balance amongst the entities that they regulate, that the appropriate focus is being applied so that there's some level of consistency. So for example, if an organization's maturity in one particular area, say information security, is less sophisticated and mature than its peer organizations, a regulator is going to know this and provide feedback on focus areas to that organization. And as regulators also keep abreast of what's being done in other jurisdictions, they can also serve as another source of best practices for organizations across different programs which support operational resilience, whether that be pointing an organization to other guidance by other regulators or sharing information that they're aware of. It's then incumbent on the regulated organizations to align both regulatory guidance and expectations and their own risk assessments to make the appropriate strategic decisions for operational resiliency. Using a regulator's guidance as an input into your priority setting process, where it isn't an explicit expectation given to you by them, can help to keep your posture across different elements of resilience consistent and balanced with others, especially when it comes to areas where your organization is less mature than others and could be at higher risk. So I'll turn it over to Peter.
Thanks, Mario. Appreciate those comments, especially your thoughts around balance. Very important. Couple of things I'd like to add. Clearly, they have an important role in supporting resiliency, and just a couple of examples I want to highlight around regulators. First, the Bank of Canada, as my regulator, sets the rules for FMIs like us to follow, right? So the Bank of Canada's risk management standards for designated FMIs clearly define resiliency for infrastructure like us, right? These standards are based on international standards and they apply to all FMIs equally. And I think it's important because they help establish this common minimum framework for resiliency, right? And I think it's important as they push firms forward and we continue to evolve. And standards are important because they're objective and they allow for fair measurement, they allow for tracking, they allow for easier compliance. So a big part of their role is that. But second, and maybe even more important, is the work a regulator does around bringing us all together. And I think about some of the work they're doing at the Canadian Financial Sector Resiliency Group, otherwise known as the CFRG. This body has been set up around information sharing and around joint testing. It's a public-private partnership led by the central bank. And the bank puts a lot of work there to ensure that industry is keeping focused on a couple of things, right? Regular industry testing, and heaven forbid, coordinating a response at the financial sector level to a systemic level operational incident. We all know that regular testing is important because it builds muscle memory, right? And it brings this much needed regime of continual improvement as we learn from our tests. So if I just go beyond that role, Roxana, think about the other part of your question around navigating the landscape. That's interesting, right? My firm is lucky enough to have fantastic people that inventory the requirements, help us manage them. We have solid leadership at Payments Canada that value this. There's tone from the top. It's important and it's done well. I think senior leaders have to buy into the importance of the work, right? And the importance of those relationships. And then, I would add that the regulatory folks at the Bank of Canada are great to work with. We're lucky enough to have smart people who understand their business. They're risk-based. It's very easy to have a positive working relationship with those kind of folks that just get it. So to summarize, we have standards, but beyond following the standards and evolving practices, important things like CFRG really drive us forward, right? And it's important to dedicate the time and resources for them. And maybe lastly, comes down to leadership and tone from the top, and that will likely trump everything.
Sonia, what are your thoughts?
Yeah, sure. I think my colleagues here have really covered a lot of stuff, but let me just maybe add a couple of comments. And first of all, I would say, first and foremost, that I think it's really important that we work in lockstep with our regulators. And it's important that our strategy align with regulation. And when I say that, it's really that that we can't really think about the regulation as an afterthought. Let's, develop our entire strategy and have a plan and then try to force fit the regulatory perspective into that. So I think it's really important that across your organization that you're really understanding the regulatory environment and you incorporate it into your business planning and your strategic activities. Having said that, it's, like so many things in this space, it's more complex than it sounds, because so many financial organizations operate in multiple jurisdictions. And so you're dealing with multiple regulators. And, sometimes, although regulators try to be aligned, sometimes these things work a little bit in conflict with each other. So you really have to think that through as you're developing your business plans and your strategies globally. I would reinforce the tone from the top, culture, leadership. That is the most critical. And, you can put all the rules and the processes in place. And if you don't have that, it really is a challenge. And when I think about the regulators, I think generally they're viewing things through the lens of safety and soundness and customer protection. So I think we should look at that as a positive and try to leverage that to enhance our broader strategic objectives. I'd add one thing that we haven't touched on around this question in the regulators is if operational resiliency is at the top of their list, falling out of that very quickly is third, fourth, and fifth party risks. And I think that ties in very closely with operational resilience. And sometimes organizations lose a little bit of sight of that in terms of their accountability for every business partner that you have. And really managing and understanding the risk that is posed through those relationships. And I think that is an area that the regulators, when they're looking at an organization, they're really paying a lot of attention to make sure that we actually understand those relationships and we have the same processes and controls that Mario and Peter were just talking about in place for everyone that we're doing business with, and particularly those critical business partners. Roxana, back to you. Thank you.
Yeah, it's a really good segue in my next theme around achieving operational resiliency is inherently challenging because of the increasing complexity of key business processes, technology infrastructure, third, fourth, even fifth party risk management, and those unavoidable organizational silos that occur. What are some key challenges that organizations are facing in building operational resiliency, and how can we overcome these obstacles? Peter, I'll go to you first on this one.
Well, thanks, Roxana. That's a big question. So if you think about our experience in our organization, right, we're part of a large, complicated financial system, right? So when it comes to resiliency, FMIs like us clearly can't do it alone. And we can't do it alone for a number of reasons. We can't do it alone due to resources, whether it's people, power, or finance, or due to interdependencies. So at the end of the day, my organization is a small member association that needs both internal and external support to build what I would call true resiliency. And if I double click there for a moment and focus a little bit on the internal, right? We really need internal leadership to marshal the strategy, to marshal the resources, and to really have that follow through, right? So what does this internal leadership look like? For me and for our organization, it means risk having a meaningful seat at the decision table when resources are being allocated, right? I would go back to first principles. It means having leadership at our organization understand the FMI mandate. As mentioned a few minutes ago, this mandate is safety and soundness, right? And it's just important that senior leadership supports that resiliency journey. I think it also means having board support, and it means having the board understand and prioritize resiliency. And below that, it means having the right skills in place, the right frameworks in place to deliver, right? And those skills and frameworks are varied and they're complicated. And there's no one size fits all solution here. I think it's a bit of a spicy mix around risk management, around vendor management, around BCM, around IT, operations, regulatory management, comms, and others. It's a really big list, and there's a lot of folks to tend to. And it's definitely part of a multi-year journey to get it right.
Mario, I'll go to you next. What are your thoughts on some of the challenges and obstacles?
Thanks, Roxana. So I would amplify a lot of what Peter said, particularly because, like Payments Canada, Interac is an FMI as well, and we also share the same regulator. So I definitely agree with a lot of the points that he said along that front, particularly when you think about leadership. I think that's a great place to be looking at. So I would add to that even with the full support of your board and your senior management, a strong risk culture and prioritization, financial resources are never unlimited for operational resilience. Organizations are always going to have a list of future operational resilience activities that they need to prioritize. Given the inherent challenge of limited resources, it's really important for organizations to consider adopting what I would call an operational resilience by design approach. Essentially a default model where all aspects of resiliency are considered and embedded in anything new. So whether that's new products and services, new technology, processes, practices. If you can establish a culture and a methodology to incorporate operational resilience into new initiatives from the start, this can really help to minimize the extent of future investments, including major rework on technology platforms and systems. It's really back to what we talked to earlier around the balance between being proactive and reactive. So organizations are always going to have ongoing investment in operational resilience. Like many things, it's a journey that will never end. But if you start something new with that being considered, it becomes more about maintenance and continuous improvement than a major overhaul down the road. So that hopefully will mean fewer major operational resilience projects in the future that are needed to close major gaps.
Sonia, what are some of your thoughts?
Great, thanks. And Mario, I really like your comments about, the new stuff. Let's not make the same mistakes on the new things as we did with all the things in the past. So that's one for us to all keep front and center. I'm going to answer this question maybe a little bit more tactically, because, we talk about different regulators and how they approach things differently. So I sat on a board in the UK for a number of years, an insurance company board, and the PRA, the UK regulator, has been very prescriptive over the years about operational resilience and their expectations. And so the insurance company that I was on the board of, we really focused on the base, driven by that regulation. We focused on identifying critical functionality in the organization and developing end-to-end processes to solve for that. And that was just a really big focus that permeated the organization, had very strong leadership support. And the sort of the logic behind it and the methodology was really to identify those 3, 5, 10, however many critical functions you have in your organization that you need to fully understand on an end-to-end basis how you get back up and running if something happens, what the time frame is that is acceptable. It's tested, it's planned, it's just, and it seems like a fairly small thing, but the complexity and the work involved in actually going through that, so for example, if you're an insurance company and there's a weather event, let's say, and that puts you out of business, the process that you would go through is understand start with how long are we willing to be out in terms of being able to, let's say it's process claims. Let's say a critical functionality is to be able to process customer claims. And so you start with, okay, that's a functionality that we have to be able to deliver. How long can that go down? And so once you've determined what a customer acceptable amount of time is for that, what does the organization have to do to get that back up and running and achieve that? And so, you'll have 2, 3, 4, 5 critical functions like that, depending on the scenario. In a bank, it might be, how much time do you have to be back up and running to get cash into customers' hands? And so again, and when you think about the complexity of financial institutions and all the departments that you have to work across, you can't handle more than 3 or 5 or 7 or 8 sort of critical functions that you focus on that way. But I thought that was a really good way to not just think about it theoretically or strategically, but just as it's a bit like your cyber desktop exercises or the processes that we go through with cyber. It's the same sort of thing in terms of how do we go through the actual scenarios, go through the planning, go through the testing. And I really felt like, here in Canada, the Rogers outage was sort of the perfect live test, I suppose, in terms of how it impacted everyone. And of course, there were challenges with it. But I think in general, we were able to, as an industry, handle that pretty well, including the payments folks in terms of ultimately managing through that. So I think in addition to the leadership and the culture kinds of things that I agree are critical, just this, this scenario planning and working through it from a tactical point of view is also really important. Peter, you're back.
Yes. Welcome back, Peter. I've heard a theme through all the questions that culture from the top, like leadership, having that buy-in from leadership and building that culture from the top is very important. My question is, with so many competing priorities and strategic objectives, how do we get operational resiliency to the top of the executive level agenda and to the kind of top of mind for the board? And I'll start with Mario on this one.
Thanks, Roxana. This is a great question for us to tackle. So I guess first off, the top organizational resilience priorities are going to be unique for each organization based on its own assessment of those. Each organization will have evolved differently across many different programs that contribute to operational resilience. Having said that, I think it's fair to say that technology resilience, information security, third-party risk management are likely going to be top of the list for most organizations. In terms of getting it on the executive agenda, I would recommend that it starts with a board and an executive level discussion to really understand and align on importance and commitment as well as the approach. So going back to earlier comments around senior leadership, culture, it needs to be something that's part of your normal operations versus a project that has a defined scope, start and end. So maintaining a strong operational resilience posture requires continuous effort and investment. It's never going to be and shouldn't be a one and done. So you really need to make operational resilience a part of your DNA as an organization, making it something that's worked on continually and given that ongoing focus. Going back to my earlier comments, it's ideal to consider operational resilience whenever you're implementing something new. Ensuring that operational resilience is considered in the design with any new implementation not only establishes a strong posture right from the start, which is critically important, but can also minimize the risk of rework after the fact. You're also going to need to ensure that you're continually assessing the internal and external environment and identifying exposures or areas of improvement. Things are always changing, both within your organization and externally, so you can't be complacent that way. This will really help set your resilience priorities. But as a final point, you'll need to be flexible, as like many things, plans can and will change. So you'll need to be able to pivot to address new gaps or issues. So you'll need to be prepared for that.
Yeah, being flexible, I think, is critical when building your operational resilience program. Peter, what are some of your thoughts?
So as usual, I completely agree with Mario. I'll add a few thoughts. In my experience, getting to the top of that executive agenda requires a couple of things to be on solid footing, and I would call it good governance and a strong risk culture. So if I think of governance at a macro level, in my mind, this means having a few things in place, right? I'll start with having the right board structure and engagement. And in my mind, that means risk having a prime seat at the board table, hopefully supported by a strong risk chair. Beyond the board, I think we need the right org structure for a firm, one that clearly makes risk part of a senior leadership team. So support, I think, both at the board and executive levels should be enabled, right, through org structure, through things like a strong three lines of defense, and as usual, the right leadership. And if I think a bit beyond governance and step back, governance gives us the mechanisms, that's great, but you also need the right risk culture, right? And it's that culture that will align and direct your risk-based thinking. And at Payments Canada, we strive to embed that risk into, as Margaret said, the DNA of our firm, right? And it's my job to make really to make risk meaningful to strategy, to make it meaningful to project delivery, and in our process of making decisions. So, I do my best to bring risk out of its sometimes comfortable and traditional second line of defense challenge role, to push risk sometimes at the forefront and take on a leadership role. And I think leadership matters. And I think leadership is a big part of getting at resilience and getting at the top of a corporate agenda. So just in summary, important to have a strong risk voice at the board, important to have the right leadership in place, strong relationships. Risk leaders have to push for the right org design, have a well-resourced and skilled team. It is not easy. It takes time. It's not months. It's not quarters. It's likely years. But I think you'll know it when you see it.
That's great. It's very true. Leadership is very important in achieving some of these, especially kind of their risk strategic objectives. Sonia, I'll pass it to you.
Thank you. So I completely agree with Peter's comments about the importance of the risk team and being at the table and leadership. I would actually go even a little bit further, which is to say that in today's kind of environment, risk needs to be the responsibility of everyone. It's not just the responsibility of your chief risk officer and their team. They're sort of the navigators of it at the end of the day, and it's sort of and the leadership of it. But then they can't do it. The risk folks can't do it all alone, and so that's where this leadership and culture all comes into play, because you got to have the whole organization aligned to that same mindset and that same thinking. In terms of, really getting it on the agenda, I think at the top of the house, it's already, through the pandemic, through climate, through cyber, I think it's on the agenda. The challenge is operationalizing it, what to do with it, right? Like, putting the resources behind it. I think over the, what the last 3 years have taught everybody is, you need to be operationally resilient. You need, so we're well into the kind of the buzzwords of it, and everybody will, nobody's going to say, oh no, we don't think that's important. So we're well into that, but it's really fully understanding what to do with that now and how to build. And I think Mario said this about it's not a project. And I think that's really important. It's how does the organization led by the board incorporate it into basic decision-making and planning and the culture and the way you think about everything you do. And I think that's the stage that we're at right now. And that's where the CROs, people like Peter, really come into play in terms of, helping the organization move down that path. But I think the recognizing it as a priority is there. It's just how do we execute on it? And frankly, in terms of prioritizing it, from my perspective, all these other things we talk about, these individual items, they all should tuck under operational resilience, because you can't knock that, like it's like whack-a-mole if you're just trying to deal with those things individually. So you need to have this framework and this structure and this way you think about it. And I think operational resilience is the packaging for all of that.
Very, very well said, Sonia. I got a few themes kind of that were...
Well, one theme is that we keep agreeing with each other.
Yes, and that's very true. And I think that's kind of the... and even regulators agree with that. So we should really take advantage of that and bring it all the way up to the top. And I really like that, being proactive versus reactive. We need to move more towards that forward-looking, proactive nature. Thank you so much for sharing all your expertise today. It's been an absolute pleasure to have this conversation with all of you. And thank you for taking the time, everyone, and your insights and all your suggestions for the audience. Stay safe and have a great rest of the day, everyone.